Hello everyone and welcome back to Business Guide. Introduction. Tesla stock has without a doubt been a huge tear over the past few months. We've seen Tesla stock go from $200 per share to $2,400 per share before adjusting for the recent split. While this has been a massive run, Cathie Wood, the CEO and CIO of ARK Invest, still believes that stock is undervalued. Cathie bull case on Tesla stock and why she still believes that the stock is undervalued. Cathie's 5-year about look on Tesla. It is important to understand that Cathie is looking from a 5-year perspective. Tesla stock could go up 50% or down 50% over the next few months, but all that is not important to Cathie's point of view. The point is that Cathie is looking at the long term and not the short term. Imagine where Tesla will be in 5 years. Will Tesla's growth slow down substantially? Or do we see solar and EVs growing exponentially? The second question is what Cathie sees in Tesla. Cathie quoted, "We still think that Tesla is still way underestimated. Even with the massive move, it has hit $350 at the bottom in March and is now $1,900 roughly. Even with worst case scenario, there has been $1,500 average. Now that's a 5-year price target." Tesla would lose money share. We first made this analysis in 2018. 2018 Tesla had a 17% share of the global EV market, including China last year. I think they had 23% share. The point that Cathie makes here is extremely important. Cathie priced a market share decline, and for Tesla, in order to reach a bear case of $15,000 per share pre-split. However, since then we've seen Tesla continue to take market share from the rest of the EV companies. Cathie is indirectly pointing out that her bear price target is outdated. We assume for the bear case, if Tesla would lose market share from that 17% and go down in our base case 11% and bear case 6%. Instead, what happened is that it went up 23% last year, and now I think we're up to, it's rough, about 26%, so it's still increasing. A 79 to 80% share in the United States, and even in China, where I think there are 1,500 electric vehicle manufacturers, Tesla has 21% of that market. 1,500 manufacturers and Tesla is 21%, said Cathie. A continuous rise in market share. For years, we have heard the EV competition is right around the corner, and we're still hearing it today. Nonetheless, behind the scenes, Tesla's market share is still continuing to increase, and that bolsters Cathie's price target substantially. Now, Tesla is not losing share, it's gaining share, and in that case, we have nothing for autonomous and for ride-hailing. Ride-hailing, we do think they are going to start a ride-hailing service this year. They're going to compete against Uber and Lyft. We believe if they do that, and again, we think they will. We think that the bear case is history then, explained Cathie in a YouTube interview. Given that Cathie is a prominent Tesla, but I am sure that she had some information, some clues as to how Tesla will initiate its ride-hailing service. As we all know, Elon Musk has been looking to start a robot taxi hailing service for years. However, Tesla FSD certainly isn't ready yet. Even if it were, it would take years for it to pass government regulations. What Cathie is talking about here is if Tesla would launch its own Uber and Lyft ride-hailing service where current Tesla owners wear taxi payments to the destination, this makes sense from a logical perspective. If Tesla would suddenly roll out a robot taxi network, people would likely be skeptical of Tesla's ability to create a ride-sharing service. On the contrary, if Tesla will start with a human-driven network first and then scale up to a robot taxi network, then people who are already using the human-driven network would be more willing to try a robot taxi. Along with this, Tesla will also be able to utilize what is known as a Tesla effect. When someone goes inside a Tesla for the first time, a transition begins to occur in the first few minutes. People may find the Tesla interesting. Give them a few more minutes, or sooner or later, those people will be interested in buying one. With the release of a Tesla ride-hailing service, the number of times the Tesla effect would occur would increase by a significant amount. In addition, Tesla would be able to attain some passive income without putting in extra work. This will be important for turning profits despite massive R&D expenditure. Cathie would have likely spoken to prominent Tesla executive who ran her through their plan, and the ride-hailing service was likely to be part of that. While this sounds great in theory, the initial cost for Tesla is far too expensive for the majority of the population. Cathie explains how Tesla would actually do a business model similar to a rental car company for the ride-hailing service. Even Tesla could actually hire people, make them full-time employees, because the total cost of ownership for a Model 3 today is about 30% less than a Toyota Camry, mostly because of the residual value. In fact, we have seen some Model SS selling for 90% of what people buy them for. We think the Model 3 will be even better if those become the ride-hailing network cars. So what's going to happen is Tesla will say to a person, join us, and for $5,000 down or $7,000 down, buy a Model 3, you can work the rest of the price off, and by the way, it's going to be cheaper for you than a Toyota Camry. A Tesla would cost less than a Toyota Camry, and that's where Kathy is referring to Gene Munster's calculations. Munster is a famous fund manager of Loop Ventures who found out that Teslas are cheaper to own than carry because of their low maintenance costs and the fact that Tesla retains a large portion of the value over time. Last but not least, a Tesla ride-hailing service would bring data for research on full self-driving. So they will do that, and then what does it do is drive 50% or 60% of the day compared to 5% of the day I drive. They're going to be delivering real miles Tesla to feed autonomous network. So we think they have somewhere between 14 and 15 billion miles worth of data, just like what we mentioned with genomics-based data in Vatai. Some is true, the autonomous taxi network. The winner is going to be that company with the most data and the highest quality data and the best IA deep learning neutral network expertise. They are doing some very interesting things with video labeling in the AI area, which we think has them miles ahead. There is no one's which is even close. Google's not close. Cruise automation is not close. No one's. All of this is bonus to the fact that Kathy still thinks Tesla's stock is still undervalued. As of today, her base case for Tesla stock in 5 years is $7,000, and all of that is without ride-hailing. Also keeping in mind that these are not just random numbers being thrown around. Kathy is calculating these price targets based on actual sales number predictions. We are not worried at all. In fact, our base carries, which is 7,000 range, again a 5-year target. The base case will also go up if they do launch this ride-hailing network, because we have not included that in our base case. We have simply assumed that they keep their share from last year's, not lose it. So we believe we may be assuming that it may go back to 17%, but nonetheless we are 19,000 now, 17,000 before ride hailing. It will go up with ride hailing. Our minimum hurdle rate of return for any stock or portfolios is 15% at a compound annual rate over the next 5 years. That means a doubling over 5 years, so at 7,000 plus versus 1,900 today, we are still well above that. It's still one of the most performance-driven one. The most of the stocks in our portfolio event today. That's right, Kathy still sees the opportunity in Tesla as far better than any other stocks in the market. Of course, we won't see Tesla stock up 500 like it did in the past year, but even a 200% return over the next few years is very interesting. Now, there are still more factors that could potentially drive Tesla stock up even more the next 5 years, and the largest one of them all is full self-driving. This leads to Kathy's golden goose target $22,000 on Tesla stock before the split. If accounting for this split, that would mean $4,400 per share. Elon is saying that he had been driving to and from work pretty much without in the prototype of their full self-driving car, pretty much without having to intervene, so I think they are. Well, I love about Elon Musk is he is a guinea pig. He is willing, and I believe him when he said that, so they are probably because of the billions of miles of data they have seen more corner cases than I think most auto manufacturers and technology company will see in the next 5 years. So it's going to be very tough for anybody to catch up to them, explained Kathy. Tesla insurance. We discussed many factors of the future of Tesla, but we believe the most overlooked factor is Tesla insurance. As of today, analysts expect Tesla will begin selling millions of vehicles in the future, especially with the release of compact car. However, what they almost always overlook is that Tesla can insure a large portion of these vehicles today. Tesla insurance makes up a small portion of Tesla profits. Nevertheless, when Tesla begins to have tens of millions of vehicles on the road, being able to insure all these cars is going to be a huge profit machine. After all, Tesla has far more data than any other insurance company in the world. The company will know aggressive someone drives, how often someone changes lanes, and practically everything you can think of in the insurance world. Data is king, and analysts are not pricing this in. Apart from that, light is also to be thrown upon Tesla's solar and energy. We all very well know it makes a large portion of our bold thesis. We all know that the oil market have seen trillions of dollars being made in the oil business as solar and battery costs inevitable decline with more research. Tesla will be able to continue to steal more and more market share from traditional oil companies. The potential here is enormous and is another joint dent in the short seller agreements that value Tesla as a car company.